He who wishes to be rich in a day will be hanged in a year. Leonardo da Vinci. My friends, the program we teach here offers a great deal. Those of you who have been with us for a few days, a few months, a few years, you see what it is we talk about, trading patterns. When we see weekly vertical crossovers, the price percent oscillator crossing over the red signal line going up or down, it gives us a portent of what is going to happen to stock or ETF prices when the stocks, the ETFs are chartable. And my friends, things like the S&P 500, the NASDAQ 100, 20-year bonds, gold, and there are many, many more. These are just the four that we have chosen to bring to you every day. Now, thank you so much for being with us. Let's jump into these charts. I got a little added bonuses here at the end. I'm going to throw in a couple more things for you I've had requests on. So if you want to stay tuned the whole time, you can. If you just want the first four ETFs for us to review, that's all you got to stay for. 10 to 15 minutes a day, that's all we ask. We see the markets as far as stocks go, we're down a little bit. Well, we're down for the day. We see bonds and gold up. The S&P 500 down 0.77%. Now, nonetheless, we still had an up week. You can see overall we have a green up candle reaching a higher high. Prices above the weekly trend line. Price percent oscillator, though, after 3 weeks of nice movement in the same direction, lost a little bit. Derivative oscillator also shaved off some energy. As we go to the 2-day chart, look at what you see there. Look how we ended the week. Now, again, the Wednesday, this was Thursday and Friday, the 2-day candle for Thursday and Friday. The Wednesday was up. This Thursday-Friday candle is a red spinning top below the 4-hour trend line and sitting right there on the 2-day. Hasn't crossed over yet, going down, but a slowdown in the up movement most definitely. We saw a red open box slow down, not nearly as drastic, back on the Tuesday-Wednesday candle ending the 8th of July. But again, this one, we see the price percent oscillator still positive but heading down. Derivative oscillator still positive but heading down. Look at that 4-hour chart. It crossed over at the end of the day on Thursday, down in the morning, a little bit further down in the afternoon, piercing in the morning the 2-day trend line. That was a warning bell. In addition to that 4-hour crossover going down, still above the weekly trend, but again, a definite loss in a great deal of energy. So again, told you to keep an eye on that. Those of you who are still watching and waiting haven't had that crossover yet on the 2-day, so we'll keep an eye on things. Different warning bells, different amounts of training cause students to do different things when we see that happen after, of course, we had that 2-day recross. Now we go to the Qs. Down more than the S&P 500, down 1.12%. And again, look at what we have here for the week. We have a red open box, spinning top, long wick on the top, another wick on the bottom, showing a great deal more weakness than the S&P 500. Great deal more loss also, those of you who have been tuning in this week with us. We see that the price percent oscillator has gone flat. Derivative oscillator losing momentum. Pierced the 2-day trend line and the weekly. Again, more alarm bells, warning signs going off. That was on the weekly chart. 2-day chart, we can see where it is below the 2-day. It is pierced but closed above the weekly. And look at that, crossed over going down. So most definitely that move is out as far as our program goes. Once you have, that is the last straw to have the 2-day chart crossover going down. You darn sure don't wait for the weekly to cross over. But of course, plenty of opportunity to pull the plug prior to that. We see that the 4-hour chart rotated over going down back on the morning of the 23rd of July, and then down that afternoon, down hard in the morning on the 24th. A little bit of a recovery there in the afternoon. But again, lots of loss after things peaked quite nicely back on the morning of Tuesday, the 21st of July. Then we just saw that pattern just rotate over. Pierce, of course, first the 4 hour, or the two, I guess what we call now the half day, then the 2 day, and then the weekly. So again, lots of weakness there. Now, we go on to bonds. You would have hoped bonds would have been up markedly with the stocks down so much, but just barely, 0.01%, 0.1%, still meant a good up week for stocks. Still not a weekly vertical, for bonds, still not a weekly vertical crossover. We see prices above the 2-day trend line, and again, not a crossover yet. Maybe that will happen by the close of next week. Put that in your show notes. We see on the 2-day chart, price percent oscillator spiking up, derivative oscillator heading up. Nice big green up candle reaching a higher high. So again, we'll just keep an eye on things. Half-day chart, it crossed over going up. Back on the morning of the 23rd of July, really 2 days of decent up movement. So what we're waiting for is to see if the weekly is going to cross over in the direction of the 2-day over the course of this next week. Maybe next Friday we'll have a weekly vertical crossover on bonds. Maybe not. We'll let the market lead us. Gold, I tell you, does that gold trade just look super? Up 0.78% for the day. Price percent oscillator spiking up. Prices above the 2-day and the weekly on the weekly chart. Go to the 2-day chart, and again, higher candle. Nice to see things just stroking up after that weekly vertical crossover back somewhere around the 165, 166 really mark, up to a high of 179.16. It's quite beautiful. And again, we go to the half-day chart. Still like to call it the 4-hour, but it's actually 195 minutes up in the morning. Bit of a pullback, a slowdown in the afternoon. Folks, that's where we are. As we look at these charts, again, keep your eye over the course of the next week on the S&P. What is it going to do in particular? Is it going to cross over going down on that 2-day chart, or is it going to bounce off and keep moving up? We're, of course, out, if you waited this long, on the Qs because of that confirmed 2-day crossover going down. Maybe there'll be a recross in the future. Maybe not. Maybe that bull trap is being sprung before your eyes. What are we waiting for on 20-year bonds? Of course, we're waiting for that weekly to cross over going up, or for bonds just to start crashing again and the 2-day to recross going down. And gold just keeps them moving up. That's beautiful to see since our weekly vertical crossover back on the week ending the 26th of June. So again, we now have 4 weeks of beautiful up movement in gold, and of course this week really pulling away from the red signal line. That's where we are as we end the day. If you don't have our book and you want to really supercharge your training, learn what it is we teach here, you got to have a copy of it. I have an autographed copy waiting for you. Please follow the link in your show notes to our Square page. Buy the book. We'll get it right out to you. If you live overseas, for some reason Square will not clear your foreign credit cards, so email us, cw@chartingwealth.com. Guess what we'll do? We'll send you an autographed copy postpaid wherever you are in the world. Thank you again for all the Patreon supporters, Advanced Market Mastery students. We are getting out to you part 2 of charting this weekend. Very excited about it. We've got more charts to cover for you right now. Let's jump into Bitcoin, up 0.47% for the day. Ends the week with a green up candle, green open box. First one we've seen in a while. Price percent oscillator pulling ever so slightly away from the red signal line going up. Waiting to see, is this 2-day going to recross and give you a jumping in point? If it does recross over the next 2 days, that would be Monday and Tuesday. Your jumping in point would be at the close of the market on Tuesday. Keep your eye on that. Note that on your charts. And of course, we've had 2 days of decent up movement on that half-day chart. That's where we are with Bitcoin. Where are we with real estate? Down for the day, 0.75%. Look at real estate just sliding sideways. Price percent oscillator trying to edge up a little bit. Derivative oscillator losing momentum on that weekly chart. 2-day still negative, about flat on the price percent oscillator. Derivative oscillator losing downward momentum. 2 days of some green spinning top, 2 candles, 4 days of some green spinning top up movement. Half day, we can see where things peaked back on the morning of Thursday and then down Thursday afternoon, Friday morning, and Friday afternoon. So real estate, doesn't know where it's going. The 2 days down, the weekly's up. It's got to sort itself out. Continue to keep an eye on that. What about black gold? That is oil. Up just a little bit for the day, 0.10%. Of course, we had that weekly vertical crossover back on the week ending the 2nd of July, jumping in point somewhere around the 28.31 mark, a high 30.22. So again, that weekly vertical crossover is working. We look at the 2-day chart. We can see a red spinning top. We've had a number of those. We have a bump up and then sort of a sideways slide, a little down, and then a bump up, and then a sideways slide, and then a bump up. So I guess we'll just continue to watch and see. Price percent oscillators about flat. Derivative oscillator losing momentum. Go to the half-day chart. Down in the morning, bit of a recovery in the afternoon. Like we said, not much. It did cross over on that half-day chart. Price percent oscillator did, and derivative oscillator gained a lot of momentum going down in the afternoon, but ended the day up 0.10%. Now, little surprise for you. We had people ask about silver. I've looked at silver before, and you know, silver can be okay. It got a little screwy around the January, the January of 2020 through the February 2020 weekly charts. But then it slammed over going down and then slammed back over going up. That looks nice. We look in the past, you know, we see other times where it's gotten a little screwy on us, but there's some good times in it also. We would have to backtrack it. In fact, that's the special training we have in the show notes today for our subscribers. If you're not a subscriber, you're never going to get any of this special training. The way you get it is you go to chartingwealth.com, sign up for free. We never spam or share that list with anyone. What we do is we send you out our daily market reviews, our once-a-week comprehensive review and forecast, which I'm recording right now, along with all of our special trainings. And special training today is backtracking, using stock charts to find trading patterns. And that's what we look for here. And of course, when you backtrack, you're playing Monday morning quarterback, and you see how well the weekly vertical crossovers worked. And then you also see how well your 2-day and 4-hour charts helped you not get screwed over in these crazy little patterns that can occur. Because there's some charts where you just can't tell what the hell's going on, and you're not going to take the risk of trading those ETFs or whatever the security is, whether it's an ETF or a stock, because it just isn't chartable. That's what backtracking allows us to do. That's what that training's all about. So again, silver's okay. It might even be better than it looks depending on this time period if you go check that out. And if you also go back in time and check out some of these other areas where it got a little squirrely. But for the most part, again, what we do is we look and see are 90% or more of our weekly vertical crossovers accurate. If so, it's something we like to track. And again, for this year, the S&P 500, the NASDAQ 100, 20-year bonds and gold, yes, we have had 13 crossovers. They have all been accurate, save one. So again, do the math on that. 12 out of 13, that is a 90+% accuracy. That is why we use the charts we use. There are many others. You just have to know the method that we use. And we want you to practice trade this stuff. We're not a stock calling service. We're an education firm. But we look at silver, you know, hey, if you jumped into silver when it crossed over on our charts on the weekly vertical crossover, again, somewhere around the $15 mark, reached a high. this week of $21.51. That's okay. Not bad at all. That 2-day chart gave you a 2-day recross that would have allowed you to jump back in somewhere around the 1721 mark. That was on Wednesday the 8th. That was 1721 on the 8th of July to a high of $21.45. Hey folks, that's pretty nice in just a few days, isn't it? That's the beauty of the 2-day recross. And again, it's why we pay attention to those things. Market had been moving up. You would have taken your profits somewhere where things topped out, at least where that 2-day chart crossed over going down, and then you would have jumped back in with the recross. Again, beautiful. Lastly, because you asked for it, we'll go to the US dollar bull index and see, is it really something you want to try to track? Well, it looks all right for the most part. I'm just doing a quick glance at the weekly vertical crossovers. Didn't work well here, and didn't work well here, and did not work so well, didn't work so well here either. Don't like a lot about where it's been here recently. Going back in time, looks a little better. See how squirrely it gets. Yeah, here recently is really where most of the squirreliness has been. Of course, when the dollar crossed, see it just some real points of wherever you see where the weekly vertical crossovers don't work, that always concerns us. Now, we did see when it crossed over strong going down most recently, that was nice, but there are some dirty areas here lately which you don't like to see. You might be able to clean those up if you go back and you explore how much the 2-day may or may not have kept you out of trouble, and how much the 4-hour also just sort of showed you where things were trending. Also, your trend lines and other things might have helped, but not so excited about UUP on what it's shown us lately. But again, take that training on backtracking. It will help you understand more about how we use historic prior movements to help us figure out where something may be going in the future. As Confucius says, he talks, and in fact, it's the quote on our channel about study the past if you would divine the future. That's what I'll leave it on, folks. God bless. All the best from the whole team at Charting Wealth World Headquarters.